There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sarli. This Wednesday afternoon, let's have a look at where the local market has finished the session in what has been a pretty choppy day as we reacted, of course, to earnings and as we look ahead to the big one on Wall Street, Nvidia. But really, we're only up by around 1/10%. There has been some very big swings coming through today when you look at the likes of Woolies results, the likes of Tabcorp, the likes of SiteMinder, Domino's Pizza, so many results to get through today. Just slightly higher though as we round out the day. Let's get to the overall thematics of the day then. It really was that Wednesday wobble, but it does look like we will be finishing in the black. And then of course CPI, electricity shock, lifting CPI there as we have the roll off there of those electricity rebates, inflation, surprisingly jumping higher than expected to 2.8% in July. So that's prompted traders somewhat to pare back their bets for the next interest rate cut. I'm going to be speaking to Phil O'Donoghue from Deutsche Bank. Remember, he's one that was saying that he expects that the August cut will be followed up by September. So it'll be interesting to see whether or not he has kept, that thought after the inflation print. And then of course, all eyes on AI as we look ahead to Nvidia's results. And a very exciting news for all our viewers as well. I should point out that Webbush's Dan Ives is going to be joining us in studio in person on Friday. Wear your brightest clothes on that day. All right, let's have a look at some of the sectors of the day. And consumer staples dragged down by Woolies. It's 14% drop there. Coles, though, adding to yesterday's gains, up 3.5%. Metcash, Endeavour Group and Treasury Wine Estates all falling. When it comes to discretionary, though, you had some pretty positive moves from those retailers, including Lovisa, which was also out with earnings today. Shares up 13%. But of course, I did mention Domino's going the other way, along with some of the others in the consumer discretionary space, including Temple and Webster, down 5%. Mining stocks, well, BHP there having a good session. Iron ore futures holding around $101 a tonne. Fresh tariff threats, of course, from President Trump, fueling concerns here about some demand prospects. And MinRes, very good session, up by 7%. Well, Woolworths posted this 17% drop in full-year profit to $1.39 billion. Domino's Pizza, meanwhile, posting its first annual loss in 20 years. Now, this was due to one-off restructuring costs associated with the closure of more than 300 underperforming stores, most of them in Japan. I spoke to Chair Jack Cowan and said, look, are you thinking about getting out of Japan and France? He said, absolutely no way. Great interview or conversation you can find on our website. Also telling me he's not going anywhere at 83, reminding me that Mick Jagger is still performing 3-hour shows at a similar age. Lovisa there, shares up 13% on a record high thanks to its strong results. Nine Entertainment up 9%, expecting to see earnings grow over the first half of full year 26, but still saying the advertising market remains uncertain. And Flight Centre's profit slipping after a weak fourth quarter. I also spoke to Screw Turner. You can find that on our website shortly. We flipped the page to have a look at their WiseTech. Its share price down 12%, missing analyst expectations. Neuron hit a more than 1 year high on its results. Tabcorp reported revenue up 12% and shares in SiteMinder soaring. The hotel platform saying it's well positioned to deliver strong revenue growth in full year 26. Australian Finance Group also higher, a near 4-year high in fact on its result. Let's get to all the earnings and welcome to the COB, Mark Gardner from MPC Markets. Great to see you, Mark.
Great to see you.
Really has to be absolutely beating estimates to be impressed by this market, right? What did you think of Woolworths?
Yeah, Woolworths, I really feel for Amanda Barbell. Obviously came from the most successful part of Woolworths, but she's really inherited, I think I read someone wrote a comment today, more baggage than a Taylor Swift record. And it really, like, there's a pet business here, there's a bunch of supermarkets over there, etc.
Big W, yeah.
There's everything. So, look, I think it's a lot to get her head around. But I think, that given that she ran the most successful part of Woolworths for quite some time, which I think that condom business it's used as a test case in many digital marketing textbooks all around the world, and she was head of that for many years. So if you were going to get someone to get something pointing in the right direction and focused and back in the customer's direction, I think she can do it. But yeah, I mean, there's only so much she can do in a short amount of time. And I was a little bit worried yesterday when Woolworths headed a little bit higher on the back of Coles, because quite often those two will eat each other's lunch. And buying the laggard when one's done well is a bit of a trap, as it's turned out to be. And I've been caught in that trap before.
Yeah.
I think Woolworths probably shows it's very good long-term value here. I mean, it's a duopoly, it's defensive, it yields. I think they've got good management in place now. So, but yeah, it's we exited I think in April when it had that rally as we switched back into more growth stocks as the market weakened. So, but we will start to have a look at it again here under $30.
Okay.
So, but more so on a long-term basis. We're in no major rush here at the moment, and yeah, but I feel for her, and I feel for the shareholders as well. But I think give it 2 or 3 years and a behemoth like that, and I think they'll start to make up ground. And
what about Domino's? Would you buy that?
No, I was asked for a comment on that from Reuters today, and we haven't had it. We haven't looked at it for over 18 months. The comment about Mick Jagger still doing 3-hour shows. Mick Jagger's not running a multinational company, so I mean, look, it's swung from disaster to another disaster for quite a long period of time, and it sort of reminds me of that that Magellan or AGL or AMP, where it just keeps going lower and keeps going lower, and everyone keeps we get asked about it a lot, and we just sort of say, everyone says it's cheap now, and every single time. So yeah, I would be waiting for at least 2 earnings stories. So I'd be waiting at least a year, and if they improve, well, on multiple earnings stories over the next year, then I would start to look at it again as it scales up. But yeah, there's so many better stories on the ASX, really. I mean, Lovisa, that bounce back in Lovisa today was fantastic.
Tabcorp.
And Tabcorp as well, yeah. And look, the Lottery Corp's done that split's turned out to be very, very, very successful, I think, overall. And so, shareholders of CSL may take note, and sometimes those splits can be very good things. There's an immediate ruckus, but overall, those businesses working independently can often be more efficient. So there's been a lot of the small cap areas and mid cap areas have done extraordinarily well, because I think so much of that money flowed in via passive ETFs into the likes of CBA, etc., and Wesfarmers and your JB Hi-Fis that the small and mid cap area has done extraordinarily well. I think we've got 8 or 10 high conviction picks at MPC on ASX small caps. 8 out of 10 of them have rallied 10 or 15% or more over the course of the last couple of weeks. Objective Corp was my advent pick, so and it rallied I think 20% this week. So it and things like RPM Global, IPD Group have done very well. So some money's thankfully starting to flow back into that smaller end of the market, because it was looking pretty grim out there for quite some time. It was very liquid.
All right, let's talk about the big one, Nvidia. What are your expectations? How's Wall Street going to react?
The expectations are pretty high, but they always seem to get there. I've heard very conflicting views from the pundits. Is that even on a great result, we are so overvalued here at the moment that potentially you've got hedge funds or funds may sell into that strength. Look, I bring up where if as their revenue goes up, I had a chart I overlaid in my morning report this morning. The revenue has been compounding with it, and the share price has gone where the revenue's gone. They've got really high margins. I think they're going to be a beneficiary for some time. There are concerns over they halted the manufacturing of those H20 chips a couple of days ago. It didn't seem to affect things too much, and but yeah, it's got. Let me put it this way: it's on a better forward PE and a better PEG ratio, which is price earnings to growth, than the ASX names I mentioned before. So if you're holding CBA, JB Hi-Fi or Wesfarmers, Nvidia's significantly cheaper and probably has a larger tailwind in terms of the thematic. So I don't think it's that expensive, but Jensen usually puts on a pretty good show as well, and there'll usually be a product announcement and or the like, and a surprise. So I would expect the market to respond positively. But what it does probably over the next week in thinner markets into Labor Day, Monday holiday in the States, is probably going to be the telling factor for the broader market, because it's really held the market up. At points of weakness or points of doubt in the AI thematic, Nvidia has hit it out of the park, and that's really fueled a lot of the confidence in this rally. So I think that's your barometer for whether this rally can be sustained.
All right, just a final quick word on what the president is doing with the Fed.
Disgraceful, in one word. Central banks are independent for a reason, and I'm always critical of how, not yourself of course, but how the press gang up on our RBA and things. They're independent for a reason, because they're the only government organisation that can make a hard choice, and sometimes those hard choices need to be made because governments don't make them anymore. Politicising it, firing, I mean, Trump came out with there was apparently fraud with Jerome Powell, and that seems to have disappeared. The Democrats are going to help fund Lisa Cook's lawsuit against this. As more details have come out over the course of the day, she had 2 mortgages where she said she was living in both houses, but they were done above market rates. So even if she has done something untoward, she's done it at a bad price. She hasn't benefited from her position on the Fed. I mean, more concerningly, she should know. She should have known better. But and do you want someone sitting on the Fed board that can't even get a mortgage straight? But it's bad news. I mean, Trump knows that the only thing that moves the needle on the debt is interest rates going lower, and he's doing everything possible to get that done. I don't like the way he's going about it, and our view is that I think he's fairly happy for there to be a recession. He's installed a new commissioner at the Bureau of Labour and Statistics as well, so I think the numbers will start as a fallback, a plan B, if you can't get the Fed to do as they're told, and so the numbers might start to appear weaker than they actually are as well. But we're talking $400 billion a year in interest savings if you can get rates down 2%. So I mean, I think in his mind he'd be thinking this is for the good of the country, but the long-term effects of politicising central banks is horrific. We will end up in a perpetual low interest rate environment with huge bouts of inflation and boom and bust continuously. So it's not a good thing in the long term.
All right, absolutely. Thank you so much, Mark. Mark Gardner from MPC Markets. All right, getting back to stock specifics, the stock of the day on the call was Domino's. Our experts Michael Gable from Fairmont Equities and Andrew Coleman from Team Invest joined Koshi.
There's nothing in the Domino's announcement today that wasn't already covered by Domino's in previous announcements around the reset, the store closures, the failure to perform in France and Japan, doing well in Australia. The only thing that was in this announcement that I could see that was new is the results were not down as much as they'd previously indicated. So if anything, in theory, the market should have been saying, wow, these results aren't as bad. Now, having said that, Domino's...
We've surprised on the upside.
Exactly, not a 20% fall. Now, having said that, Domino's has been overpriced for a very long time. They've been in a lot of trouble. So should not be a shock when you see a company whose earnings are declining, whose sales are declining, whose moats are eroding.
Well, I guess what it's showing is that there's still a lot of investors in there hoping that even though Domino's is pretty clear what they're going to do with the business, I guess hoping that they'd come up with something that was, the big turnaround, the big catalyst things are much better than we said. Only
Because they're still dominant in the sector here in Australia, aren't they?
Yeah, but
Problem is they're not in Japan and France.
yeah, that's right, and even locally, I mean, you don't have to go to Domino's to eat pizza. You don't have to eat pizza if you want to call it pizza. I think it still shows there's a lot of sort of hopium still in the Domino's shareholder register.
All right, we've closed in the black after a bit of a wobbly session. Let's have a look at some of the leaders that helped get us there, including, I think we saw some pretty good moves coming through from, let me just find them for you. The likes of Tabcorp was up by something like 23%, SiteMinder was up 21%, Lavisa firmer by 14%, Worley up by 11%, and Liontown up 10%. Have we got the laggards? I'll talk them through you you've just got to look at my face. There we go. Domino's down 22%, Woolworths down 14%, WiseTech was down 11%, and Flight Centre off by some 4%, along with Ingenia. In the small end of town, we saw the likes of Aurelia Metals have a pretty solid session, up by some 22%, along with Ausgold as well, up 14%. To the downside though, some of the laggards included ReadyTech, which was down by 15%, and also Webjet down 6%. All right, tonight, of course, it's really all about NVIDIA earnings. You've also got the likes of Coles, Snowflake and Williams, Abercrombie and Fitch and CrowdStrike as well. But a very big day, of course, with NVIDIA in focus. Tomorrow, we've got private capital expenditure for the June quarter expected to lift by 1/3%. Another busy day of earnings season as we round out the final couple of days, including Mineral Resources, which did really well today, up 7%. Qantas, Wesfarmers, we're going to be speaking to Rob Scott, Medibank Private and Star Entertainment. We've also got the likes of IDP Education, South 32 and IGO. All right, we have finished higher on the overall CIBO 200, up 0.1%. The ASX 200 has finished higher by quite an impressive 1/3% actually. So quite a lot of buying coming through on the close. 25 points, 8,960. We will take that. But of course, that Woolworths lag really weighed on the consumer staples sector, which was down by almost 5%, and WiseTech weighing on IT with that sector down 2.5%. All right, I'm going to wrap it up before I lose my voice. Have a great evening. We'll see you again tomorrow.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.